All right, what is going on, everyone? For those of you who are returning, welcome back to the channel. To those of you who are new and it's your first time here, my name is Gerardo. We're going to be talking about HEX in this video, so welcome in. More specifically, we're going to be talking about the HEX stock to flow model that we've created today for you here. Now, I have to give credit where credit is due and give a huge shout out to Ryan and his team over at hexdailystats.com because they provided the necessary data that I used to create this model. We used this total supply column, did a little bit of math on it, and we came up with this stock to flow model that you see here for HEX. Now, I have to explain a few things. First of all, what is stock to flow, right? Well, more or less, it's the inverse of inflation. So if you have a high inflation rate, then you have a low stock to flow value. If you have a low inflation rate, then you have a higher stock to flow value. So the way you calculate it here in this model is taking 100, so 100% divided by the actual annual inflation. Now, you annualize it based on a certain period. And since we've only had about 2 years of data, we took two sort of smoothened curves. So this first red one is your daily smoothened stock to flow. So it looks at the daily inflation of the currency and annualizes it. So it looks at, for example, on this day over here, it says, well, if we were to continue at this current rate, this is what inflation per year would be, right? So it takes a sort of daily little snapshot and it projects it out as if that were to be the inflation for an entire year. And so when you take the inverse, so 100% divided by whatever inflation that was, you get some sort of value. So you can see that annualized inflation was pretty high, right? Because if it's below 1, it essentially means this is the year in which you created your initial supply, like within the first year. So not to make it too confusing, this white curve here is smoothened every week, so it looks at the change in supply every week. So it's sort of a longer term moving average, if that makes sense. That's why it's smoother and less volatile than the red curve, but it more or less displays the same information. So think of it as a longer term moving average, and the kind of longer term you go, you get a more precise smoothened version of the curve. So why is this important? Well, because the reason people use this model is it assumes that scarcity drives value. And this is a really, a very rational assumption. And if this is true, then a higher stock to flow is good because it means a lower inflation rate. Okay, so what I really like to see is, first of all, this green curve. Let's talk about this. What is this? Well, it's your minimum stock to flow. Why is that the case? Well, it's based on your maximum inflation rate. And we know that the maximum inflation rate on the total supply is 3.69% per year. So if you just take 100% and divide it by 3.69%, you get a value of about 27.1. So this maximum inflation translates to a minimum stock to flow, again, because they're inverse values. So you have a floor, basically, of which this is your minimum stock to flow on any given day or year. What's cool about this is that it doesn't take into account that, guess what? Inflation is exported into the future via staking. So that's pretty interesting, right? And so you'll always have effectively a stock to flow ratio that is above this line. So can we compare this to anything else? Well, if you're familiar with the Bitcoin stock to flow cross asset model by Plan B on Twitter, a lot of people love this because it takes time out of the equation and says, hey, looking at these assets, right? Looking across different assets such as Bitcoin, silver, and gold, you have this general trend where here we're plotting stock to flow versus market cap, right? Market value, the valuation of that currency as a whole. And what's cool about this is, again, it takes time completely out of the equation and tells you, well, over time, market valuation of this currency will trend towards a certain market cap over time, right? So it doesn't give you specific time. I like that about it, right? I believe it's interpolation versus extrapolation, but don't quote me on that. The point is that this power regression model looks at this trend and says that for the most part, it's true, right? Scarcity does drive value, and kind of the higher stock to flow you have, right? The lower your inflation rate over time, you trend towards these higher values. And you see Bitcoin with its halvening programmed in, it seems to follow this model, right? It's trending nicely against this power regression model, this curve here. And what you see is that something like gold, sitting at a $10 trillion market cap, has a very high stock to flow value at about, there's a log chart at 20, 30, 40, 50, about 60, right? What's really cool to see about HEX is that for the most part, it's been range bound between, say, obviously our minimum, but it looks like our weekly smoothened is sitting at around 80 or 90. It's been trending towards 100 recently, above 100, right? As if you smoothen it to the daily, that's definitely more volatile. So I guess you could argue the weekly smoothened is a better estimate. So let's just say the most recent weekly smoothened stock to flow, it's about 134. Now that's huge. That's huge. To put that into perspective, this model only really takes you to 100, and that would be like a 1% inflation rate per year effectively. And it looks like HEX is doing better than that, again, because this inflation is exported out into the future. So in theory, we should be trending to a market cap higher than gold, right? In theory, we should be trending towards the $100 trillion market cap. And that would put HEX in the hundreds of dollars. So when you see people tweet like HEX is pointed at $100, or people just speculating that we could reach there and throwing models, I've seen a parabolic model on YouTube. Even my own regression rainbow model says, hey, if we were to hold this regression rainbow and we were to actually find a peak, I believe somewhere near like end of 2022. You can check the chart yourself, but it does reach $100 at that point. So is that super bullish? Of course it is. But then again, we have precedent with Bitcoin, which did 1 to 6 million X, depending on where you want to measure the bottom from. You could say that you could even say it went 20 million X because it was traded OTC before like markets for Bitcoin were a thing, and so you could say Bitcoin went up 20 million X, which that's nuts, right? That's nuts. That would put HEX at like $1,000. So these numbers are insane, I know. But then again, think about the fact that this model takes time completely out of the equation. So am I saying this is going to happen tomorrow? No. I'm saying, fundamentally speaking, with such a high stock to flow, if HEX were to be, adopted as a store of value in the mainstream, then we could definitely be trending towards these really, really, really high valuations for HEX as an entire system, okay? That's the video for today. I guess there's not too much more to say on this model other than we can smoothen it out to a monthly time frame. So it would be smoother than this this white curve. Probably gonna do that monthly. Monthly is a good idea. So I'm thinking about adding this to the site. Honestly, I really am. Should we just throw in a couple more? I mean, we can. We have the adoption chart, which shows HEX addresses over time and ETH addresses over time. The Bitcoin ones are an absolute nightmare to obtain, so I don't know if we're going to do those. But we could also throw the HEX versus ETH adoption within here, right? HEX number of addresses over time, and also ETH number of addresses over time. And comparing them on a similar sort of chart. So we can include that here, or again, we can make a whole new sort of adoption page, because then again, there's no staking in ETH, or there wasn't for the first few years. So we could have like a unique HEX holders, unique HEX stakers, all in its own sort of adoption tab. That might be a better idea. So let me know in the comments what you think. Should we have an adoption tab? And we could also add the stock to flow model. I feel like that's a big one. That's a big one. So we'll populate this website with more cool charts. But yeah, let's take a look just to finish off the video at some price data. I mean, things are looking good, man. This here is not a hammer, but it looks like a nice doji, right? This looks like a nice bullish doji, if I'm not mistaken. I've gotten these candle names wrong in the past, so correct me if I'm wrong, but this to me looks like a doji candle, and that's generally a good thing. And the fact that it wicked down and found support on a previous wick up, which was resistance, is a classic support turn resistance situation. Not only that, if we go to uniswap.hex.vision, because this is a dex.vision, then you see it actually wicked a little lower, I believe, and it's more of a bullish chart in that sense here. Let's actually pull up the V2. This is not going to work right now for me. All right, I guess it's not going to work. How to open a second tab. Hopefully that works. Boom, there we go. So if you see what I'm talking about, let's just scroll this way. Look at how big this wick was. It wicked down farther on this chart, and I really like that because it wicked down. Let's turn on our magnet tool. It wicked down to this level, which was previous resistance on candle bodies. So this looks amazing to me, right? Like I was saying, this was a consolidation region before we popped off, and we even called it in a video like, Hex, is it a coiled spring? Most definitely, and it popped, right? Again, this is a very, very bullish dragonfly doji, I think is what it's called, and it wicked down to this previous resistance level as support. So that just has me way too bullish for my own good. But again, I could see these targets that we've been talking about, which are technical targets, again, are anywhere from 25 to 55 cents. And that's just our technical targets based off of bull flags. That's not even taking into account a parabolic model or our regression rainbow fractal model, which is still in play, right? It assumes that we could oscillate around this yellow region, which we have been for as long as we want, really, and then eventually have a sort of impulse move up into these higher regression bands. And for the people who say, well, what about diminishing returns? I say to you, Ethereum held its exponential regression model for its first 3 years. And so I think we should look at that model first because we are in our first 3 years for HEX. So that's pretty much the video for you, kind of a shorter one for you today. I know I didn't make a video yesterday, which broke the streak actually of 147 straight consecutive days of dropping a video every single day. Yesterday was the first where I told myself I was going to make a video. I was a little tired. I laid down. I was like, I'll make it after this nap. And I was just out until the next day. So excuse me on that. Maybe we'll drop 2 videos today. We'll see. It's kind of a busy day, so maybe expect another video. I can't promise anything. But definitely we're going to get back on track with the daily videos. Some cool stuff coming. I have an announcement for hopefully the end of this upcoming week. Really cool stuff that I've been working on that I haven't been able to share. But yeah, enjoy your new all-time highs. Let me know what you think of the stock to flow model, where you want it on the website or if you do at all. And I will catch you guys in the next video. Remember to subscribe, leave a like, follow on Twitter, Telegram, all that good stuff. I'll leave the links to that in the description below. And I'll catch you guys in the next one. Peace.